The SpaceX IPO is already going to be the biggest market event of 2026, but here is what most investors are missing. When a company this massive lists on the public market, every other stock in that same sector gets repriced higher. ETFs are forced to rebalance and buy space stocks. Institutional money rotates into sector leaders. Financial media covers space for months straight. Analysts publish comparison tables, benchmarking every space company against SpaceX. That is not speculation. That is how markets mechanically work every single time a megacap lists. And right now, there are 3 stocks sitting directly in the path of that opportunity. These are the ones you need to know. Number 1, Rocket Lab, ticker symbol RKELB. Rocket Lab builds and launches rockets, builds and operates satellites, and runs full end-to-end space missions for commercial, government, and national security customers. They operate through 2 segments. First is launch services, built around the Electron rocket, which is the most frequently launched small orbital rocket in the world. Space systems, which covers satellite design, spacecraft components, and full mission integration. If SpaceX is the king of space, Rocket Lab is the only fully operational public competitor to the throne. They have over 70 successful Electron flights, a 100% mission success rate across all 21 missions flown in 2025, and launch sites in New Zealand and Virginia. No other public space company comes close to this level of proven operational maturity. Now look at its numbers breakdown. 2025 full-year revenue was a record $602 million, up 38% year over year. Q4 revenue alone hit $180 million, their highest ever quarter. Backlog grew 73% year over year to a record $1.85 billion, giving multi-year revenue visibility. Q1 2026 guidance is $185 to $200 million, which at the midpoint represents 57% year over year growth. They also secured an $816 million contract from the Space Development Agency for an advanced spacecraft constellation. Here is why this has potential. Revenue is growing nearly 40% annually, and they already have $1.85 billion in locked-in future contracts sitting on the books. Their Neutron rocket, a medium-lift reusable vehicle being developed as a direct Falcon 9 competitor, is targeting its first launch in late 2026, which is a massive upcoming catalyst. The SpaceX IPO will flood this entire sector with institutional and retail attention, and Rocket Lab is always the first name on every space stock list. The risk is they are still not profitable, so execution on Neutron and continued backlog growth is what the market will be watching closely. Number 2, AST Space Mobile, ticker symbol ASTS. AST Space Mobile is building the first and only satellite network that lets standard unmodified smartphones, the exact phone already in your pocket, connect directly to a satellite in space for 4G and 5G broadband. No dish, no special hardware, just your regular phone getting a signal from space, wherever cell towers cannot reach. Their business model is elegant. They do not sell directly to consumers. Instead, they partner with the world's major mobile carriers. When a subscriber goes outside terrestrial coverage, AST's satellite provides the connection, and they split the revenue 50-50 with the carrier. They currently have commercial agreements with over 50 mobile network operators globally, including AT&T, Verizon, Vodafone, and STC Group, representing nearly 3 billion combined subscribers. AT&T and Verizon have both signed definitive commercial agreements to begin service in 2026. Verizon alone committed $100 million as a strategic investment. Now look at its numbers breakdown. 2025 was AST's first full year as a revenue-generating company. Total 2025 revenue came in at $70.9 million, surpassing their own guidance. Q4 alone contributed $54.3 million, showing strong late-year acceleration. They ended 2025 with over $1.2 billion in contracted revenue commitments already secured from partners. Cash and liquidity position stands at $3.9 billion pro forma, which fully funds their planned constellation build-out. They are targeting 45 to 60 satellites in orbit by end of 2026, with launches happening every 1 to 2 months. Here is why this has potential. The addressable market is essentially every mobile subscriber on Earth who has ever lost a signal. That is a multi-trillion-dollar problem, and AST is the only company solving it at this scale, with this level of carrier validation. AT&T and Verizon do not write $100 million checks for technology that does not work. The technology is proven, the carriers have signed, and commercial service activation is happening in 2026. The risk is this company is still burning significant cash, and execution on the satellite deployment schedule is everything. Any launch delays would pressure the stock hard, but without that, the trajectory is up. Number 3, Redwire, ticker symbol RDW. Redwire builds the components and infrastructure that make space missions actually function. Solar arrays, docking and berthing mechanisms in space manufacturing systems and spacecraft platforms. If Rocket Lab gets things into space and AST connects them to your phone, Redwire makes the hardware that keeps everything running once it is up there. Their components have flown on over 1,000 missions. Their solar arrays are physically on the International Space Station. Their docking mechanisms are the standard interface for ISS resupply operations. In 2025, they also acquired Edge Autonomy, adding a drone and defense technology division, which now makes them a dual domain space and defense company. Their technology has been selected for NASA's Artemis II mission, and they hold active contracts with DARPA, the US Space Force, and the European Space Agency. Now look at its numbers breakdown. 2025 full-year revenue was $335.4 million, up 10.3% year over year, hitting the top end of their own guidance. Q4 revenue came in at $108.8 million, up 56.4% year over year, showing strong acceleration going into 2026. Contracted backlog ended 2025 at a record $411.2 million. Their book-to-bill ratio was 1.32 for the full year, meaning they are signing new contracts faster than they are completing existing ones. For 2026, they are guiding revenue of $450 to $500 million, which at the midpoint represents approximately 41% growth year over year. Here is why this has potential. Most retail investors have never heard of Redwire, and that is exactly the point. This is the stealth play in the space sector. While everyone is watching the headline names, Redwire is quietly signing contracts with NASA, DARPA, the Space Force, and the European Space Agency, all at the same time. Their 2026 revenue guide of up to $500 million is already heavily backed by existing backlog. The Golden Dome Missile Defense Initiative is an additional tailwind as a subsystem supplier, and when the SpaceX IPO brings a wave of new investor attention into the space sector, Redwire is the kind of underknown name that gets discovered fast. The risk is profitability is still a distance away, and the net loss in 2025 was significant, but the backlog growth and contract acceleration tell a story that the income statement has not caught up to yet. Now, the conclusion of this whole video is SpaceX IPO is going to be the biggest market event of 2026, and the window to get positioned in these names before that event fully reprices the sector is closing. Rocket Lab is the proven operational leader. AST Space Mobile is the most disruptive technology play. Redwire is the under-the-radar infrastructure bet. All three are growing. All three have real contracts and real revenue, and all three are directly in the path of the capital that is about to flow into this sector.